Year. Let's bring in Larry Cordisco, Osterweis Capital Management co-CIO and of Core Equity. It's good to see you right here at the stock exchange. So you think it can continue? It's had a nice move. It feels like it might be wavering a little bit.
There are caveats, right?
There always are. Bring them.
Well, I think, first of all, valuation matters. And we're seeing high multiple stocks under more pressure. I think IBM is going to be a really interesting tell how that responds. Because overall, that earnings report looks really good. The one nit is foreign exchange.
Yeah.
And Microsoft's talked about it. ServiceNow has talked about it. So I think if you're a higher multiple company and you run into that headwind, you're probably going to have a bigger problem.
It sounded a little bit mixed. Yes, it was the headline beat, good, top, bottom, et cetera. But you really got to get down the margins and things like that. The stock is right now, let's take a look at it, guys, as we have this conversation here, too. We just saw it's moving a little bit lower. Mm-hmm. But it has had one of the better stories to tell this year.
Yeah.
It's a new, relatively new name for you.
Yes.
When did you buy it?
We bought it during the quarter.
Okay. Why?
I'll tell you why. Because the fundamental turnaround there, the transformation in that business, we have a lot of confidence. If you look at how they're leveraging Red Hat, which is the point of the spear for this company, they are going to do very well. It's an incredibly important company to managing multiple clouds, and it's going to bring a lot of consulting business for them as well.
See, if I'm a tech investor and I look at the move that a lot of these stocks have made over the last few weeks, I don't know how I feel about that. And maybe I don't feel great because I'm like, do you really want those stocks to move up to the magnitude that they did into the actual earnings report? Right. Doesn't that raise the bar further and further now, given the stock moves?
Yeah, well, absolutely. We think the market's sort of pinned in this range, we'll just call it 3,800 to 4,000 range. Anything above it, you start bringing the Fed back into play. Things are so good, the Fed's going to stay hawkish. Below it, sentiment's been pretty negative. And you look at what happened with bank earnings. Boy, if you were short ahead of that was no fun place to be, right?
Yeah.
So I think it probably stays in this range until we have more clarity. I saw Kramer just now saying, let's see how the earnings season goes. I think that's right. I think we're going to learn a lot about how stocks react to the earnings season.
Which is also hard to buy these stocks now.
That's right.
Before they report, right?
That's right.
Why buy before you see?
I understand. Now, a company like IBM's a little bit different. It's so cheap. And I think there is so much disbelief about the 3 to 5 year story there that this is not a bad place to be building a position. But it's not a place or time that we'd be chasing really high. Again, I'm back to this high multiple stock thing, but that's where you're going to see vulnerability.
Yeah. Let's go through a couple of quick names before I let you run. AMD. You like it?
We still like it a lot.
Own it?
Yes, we own it. It will be taking share from Intel for years. And all the worry about AMD, most of the worry about AMD is with the PC market. They make something like 20 to 30 times the gross profit dollars on their server chips than PCs. Mm-hmm. That production is just going to shift from PCs to servers. I'm very confident of that, or we're confident about that.
Google, Alphabet is another one you really like.
Yeah, we like it. It's our largest position. Look, I'll be honest, there's cyclical challenges there. If they have a hiccup with YouTube, I think people are going to be really nervous about TikTok as a competitor.
I mean, digital advertising, shouldn't we be worried about that right now?
Absolutely, but it's trading at about 15 times free cash flow. A lot of this has been discounted. The market's done your work, right, in making this a little cheaper. If you're a long-term investor, these are the times you should be thinking about scaling into a Google.
Before you leave, can you tell me why you don't own Apple? For many, the crown jewel of this entire space.
Yeah.
Why not for you?
Because they are coming off the largest iPhone cycle since 2015. And now that we're seeing how broad-based the COVID pull forward was that iPhone cycle because of the product or because of COVID? We think there's an air pocket that we don't want to be in front of.
You don't own Netflix either, by the way, which reports tomorrow.
We do not own Netflix. Again, this isn't a company trading at 60 times free cash flow. They're undergoing a massive business model transformation that we just don't think you want to be ahead of. And there's a lot of metrics you can use on how much advertising load, how much money they can make in advertising. We think it's going to be a little harder transition than what's priced into the stock.
Good seeing you in the house down at the stock
exchange. Thanks for having me.
With us here at Overtime. All right, so
Yeah.
Larry Cordisco joining us now.